Welcome everybody to the Chinchilla Pickin' Podcast. It is July the 20th, 2025 at 3:59 p.m. As always, we hope to be entertaining, educational, and uplifting because we want everyone to make money. My name is David Underwood, and I'm joined by the one and only the I'm with that thing guy, Brandon Beaver.
I
Brandon, what's
love
up?
how you went straight from laughing and that conversation that we just had and we were having, and you're welcome to the Chinchilla Cookie Podcast.
You just got to snap to it, man. You got to be able to switch
Uh,
gears right back and forth. So.
yeah, me and my girlfriend bought these shirts at Universal Studios and we wore them together when we were out at the park.
Nice. You guys are that couple. Got it.
Yeah, we're that couple.
When were you there? I don't remember you going there. When was
Oh,
that?
dude, it was years ago, like 3 years ago,
Okay.
4 years ago, maybe.
Okay. All right. Fair enough.
Yeah,
Fair enough, man. Yeah, no. I thank you for doing the podcast last week, Brandon. Watched a little bit of it. That was nice.
it was painful.
It, it was. But you did a good job.
Thank you.
People don't give you enough credit. I believe that, to our listeners and those watching, I guess, not many people are watching YouTube yet, but we have a lot of listeners. So, Brandon actually is one of the best researchers you will ever find of researching and digging into things. So, if you ever need a deep dive researcher, that is Brandon. Definitely somebody who makes me think. I've bought stocks based off what he's brought to the show sometimes, such as Disney. I made money off Disney thanks to Brandon one time. It's vaping. Ugh, sorry. But yeah, and yeah, how was your week with up here in Cincinnati?
With a what?
How was your week up here in Cincinnati?
Oh, it was all right. How was your
Yeah.
week in Florida?
I was enjoying the beach. That was my first time ever going to Destin. Never been. I've been to lots of other parts of Florida, never been to Destin. That sand was nice and soft. It was white, soft, fluffy sand, and then crystal clear blue water. Just
Destin is a
beautiful.
Destin is a very relaxing place.
Yeah, and I like that. I like that it was a lot of families, just more relaxing, no party scene. It was perfect. That's exactly what I was looking for. Wanted to get away and just unplug
Yeah.
for a little bit. And that was fun. I enjoyed it. It was a great time. Recommend anyone go down there and spend some time. But I am back. I'm ready. Not a whole lot go. I mean, Tour de France, I was watching that before we got on. I know you
I
make fun
knew
of
it.
my sports.
I called that last week.
Yes, I was watching the tour before we got on this show, and it was Wimbledon the week before. I was watching that. My weird sports, as Brandon calls it. I do watch the unusual sports,
You
but
gotta log
I
off
grew
and
up
watch.
overseas. These were like on TV when I grew up. You know, it was
You're,
different time, different place, different mix of people in those places at that time, and it was that's what we watched. So
Dave's gonna log off and go watch water polo.
I might. Is it on?
I don't know.
I'm sure you could probably bet on it now on Robinhood or something. Who knows? Yeah, but I'm back. We got some heat waves and storms. It's like Florida up here. It storms every day and then goes into just hot for the muggy for the rest of the day in Cincinnati right now. It's very unusual, but that's the way it is. So,
Yeah, you walk outside and it's like the air feels like sweat.
yes,
Ugh, it's
yes, very
annoying.
much so. All right. Well, back on it. Let's get into it. There was some good news. I think, and some bad news and some strange news. Heard a lot of rumors regarding the Fed and the Fed decision and Jerome Powell's future. I've read a million different headlines on Jerome Powell's future, and none of it makes sense or comes to any clarity of to what's going to happen. It's just people guessing, speculating based off what they see. It's a waste of time. That's how I look at it. You just
Yeah,
look
but
like you wanted to say something. Go
I
ahead.
do too. I look at it the same way. I don't really care. There's no reason to buy or sell a stock based on that. Maybe trade the S&P 500 ticker SPY, the ETF. Maybe, you would trade based on that, but no, there's no, it's, a lot made out of nothing,
Yep.
in my opinion.
Yep. So I know we're in earnings season, so at the end of the show, like usual, I go through the earnings coming up next week. Brandon, I know you said you're gonna cover some of the earnings from this past week and look and take that and look future with it. So looking forward to that. We got a good amount to cover. What do you say we get into it?
Let's get into it.
Let's get into it.
Hey,
Rules,
you
rules,
know
rules.
what?
Oh,
Real
go
quick
ahead.
though, I just wanted to say this one thing. I'm a little less scared of artificial intelligence now because I started thinking about this. I thought, if this does take over the world and it's the most intelligent, force that we've ever come up with, finally, all of my ideas will be implemented.
Nice,
Yeah,
nice.
I just wanted to add that. I'm
There
looking
you
forward
go.
to it.
Um, rules. Brandon and I get together 5 to 10 minutes before the show, and we tell each other what we're going to talk about. You're to lie back and forth, the bicker and the banter, right here on the show for you. I actually had to do a little bit of research on my phone real quick with Brandon telling me some stuff that he was going to talk about this time. So it was actually helpful that we told each other ahead of time. So I was going to go first because I have something I just want to get into and explain a little bit about, and then Brandon was going to take over, and then I was going to end. So it's going to be a little mix up from our usual routine here. Thank you, Brandon, for being patient with me on this. So I want to cover a stock I've made a recommendation on this show. I told everybody to buy it, which was a great recommendation. If you did, you've made money. Congratulations, you made a lot of money. Very happy for you. I am taking 20%. Well, on Friday, and I texted in our group text there that I was taking a 20% off the table now because for me, when I bought it, I was up over 100%. I've already doubled my money. So I went ahead and I took 20%. So 20% of my position, if you will, and I'm keeping 80% out there and put 20% in cash. The reason why I did that, there's a couple reasons for this. Number one, the main reason is I believe this is a premature run up, right? So the cause for why I bought this stock was Metsera's, by the way, if you're wondering what company is David talking about. It's Metsera. It's a pharmaceutical company. I covered it on here, why I was buying it, the weight loss drug, and the implications of how it's the half life is over double that of everything that's out on the market right now, and people were losing 8.5% body weight in the first 6 weeks. It was just outrageous results, great across the board, right? So I bought it expecting that in future tense they were going to release some great results, and then they were end up going to get bought out maybe eventually by a bigger pharmaceutical company, or they would release these drugs and they would come to market and they would do fantastic. And I was expecting that to happen a year from now. I wasn't expecting to happen immediately after I bought it and it continued to run up. That was unexpected and it's a little premature. So I get wary of a premature run up on something that I was expecting to hold for a year. That makes me a little like, well, I think this is kind of overblown. I don't see any news. I don't see any actual fundamental reason for this big run up. However, I will say it did have price targets by Wells Fargo, Goldman Sachs, all the big banks of $60, $65 a share. They were all saying it's going to be priced right around that range. They all came out to this, and they did this back in the early part of June. So a while ago, this is after I bought it, they started throwing out these price targets on this, and it was pretty high, and I was excited for that. That was good news for me since I was already an owner at that time. I just feel like this is too move too fast, too soon, with no news behind it, no fundamental reason behind it, and that's why I took 20% off. I'm securing some profits, and the reason why I did 20% because if this goes all the way back down to the price I bought it at, I would still be up literally 20% overall because
Right.
I sold 20% at this price point. So I've basically locked in gains no matter what. Because if I see it going all the way back down to the price I bought it, I'm going to sell and lock in whatever gains I get it at. but I've locked in, secured some gains here overall, and then now I know I'm definitely profitable. Thoughts on that, Brandon?
Yeah, I did something similar with Newmont Corporation a few weeks back where the the stock had ran up so high that it was more you had more value on my portfolio than like Google. And I was just like it doesn't deserve to be there, as far as valuation goes in my portfolio. So I sold some of it, and it wasn't really a commentary on the company. It was just more commentary on how far the stock had ran and what I wanted to have, you know, um, position wise in my own portfolio regarding that. Um, and the other thing is too, sometimes you could get those situations where you get a nice surprise and you could take a profit that if you get, in a couple of months you thought that that was going to happen in a year, then why not?
Right. Yeah. Why not take that money, lock in those profits? You've secured now some funds to put in other areas where you can find them. So,
Right. Now I've had another situation happen in the past where I did have a stock run up so far that, I thought to myself I'm going to sell it, but then I did my research and looked at the previous earnings and realized that they grew a lot faster than I expected to, and that the stock was still relatively undervalued and I wound up holding. So, it just depends on, what your research tells you, what your position is in your own portfolio and what you're comfortable with.
right. And you and I do our portfolios different. Like you really take into account where you're overweight, underweight, even weight, where you're at. You like a nice even weight portfolio, or if you're overweight in something like a Google. Versus me, I don't care if 70% of my portfolio is all in one company. If I truly believe in that company, then I'm just going to put it all in.
Well, that's kind of it's kind of the same way for me too. For me, I'm like, all right, I think this company is going to run faster and harder over the long term from where I'm at right now, and that's why I want to be overvalued in this company, right? So I'm overweight Meta, Nvidia, um, Palantir is one of the companies I'm a little bit overweight on, and GE. So those are companies that I'm thinking that like, yeah, I want those to guide my portfolio, so to
Right.
speak. Whereas, companies are struggling a little bit, but um, I've still got actually Nike. Nike was one of the companies that did this a couple weeks ago too. They shot up on earnings, and then that was more than Google on my portfolio. I don't know. Maybe sometimes I should just let these things play out and let the market tell me where to go. But, you know,
It seems to be doing well for you right now. How
yeah,
about that?
and it's not really about diversification or anything like that. It's just what I'm going to overweight what I think is going to outperform the market.
I like that. I like that explanation the best because
Yeah,
that's more along the lines where my head's at is if I believe this company, if I firmly 100% believe in this company, I'm just going to let's back up the truck, let's back it in.
right,
I'm always going to try to save as much cash on hand as necessary for a DCA or something, but if I'm going to back it up, I'm backing it up and we're
right.
we're going to throw it in. So, I've done that many times. I've done that many times before and I would say when I do that, I think it's been years since I've had a loss. Years on anything that I've done the back up the truck and let's back it up in. Because now I feel like I've gotten better at research and I've gotten better at making that decision. I'm very more careful when I make that decision to back up the truck, if you will. And when I make that call, let's back it up, let's buy. That's, I usually will just go, I'm like, let's do it. And it's been years since I've had a bad call on that.
Yeah, you have to differentiate between catching a falling knife and, you know, intelligently dollar cost averaging down. You really got to look at it and say, did, my whole thesis for the stock completely just fall apart?
Right.
And if it did, you got to get out.
Yeah.
You know, if you don't have any hope for the future on this thing because the reason why you bought it no longer exists and it didn't go the way you thought it was going to go, you got to get out. You
Yep.
can't just keep buying and buying and buying and cost averaging down. You're going to kill yourself doing that.
Yes, you
So,
will.
yeah. But so if your thesis is still correct and the market is going in the wrong direction and the stock price is just going down, but the company is still going the way that you thought it was going to go, then yeah, you got a dollar cost average down. And actually, I'm going to talk about a company just like that today on this show.
Nice. Well, now that I covered Metsera, we're gonna hand it over to you because there's no new news to talk about. That was the whole one of the main drivers is I don't have any reason why this is jumping up so fast. I got no new news to cover on it. We're gonna hand over to you, but before we do, I'm gonna surprise you with something. I didn't tell you I was gonna say this, and I wanted to surprise you with it. I wanted to let our listeners know that Brandon has opened a crypto position since the last time we talked on the show. Because you told me you were. You told me you bought some
Oh,
Bitcoin.
I actually didn't. I was
Oh,
going to,
come
but I did not.
on. I was gonna say, and you're up 20% now on your position if you would have bought when you said you were.
No, I didn't buy.
Look at that. He backed out. Why'd you back out? I thought you
Uh,
finally bought in. I got you. I finally got you to convert.
I forgot.
You would have been up 20%. You missed out on
This is-
20% move.
yeah, I was just distracted by too much going on, but no, I did. I'm still watching the markets, guys, so I'm still a good host here, okay? I'm just saying.
I guess we'll continue to leave crypto to my end.
Yes.
Go ahead, Brandon. Take it away.
So last week, one of the companies that I've been calling to buy on here released earnings. They dropped about 8% in the market. And this is an opportunity to buy in. But let me just talk about the earnings. For the second quarter of 2025, ASML, they reported a total net sales of 7.7 billion euros. That was the upper end of its internal guidance. They guided for a range of 7.2 to 7.7 billion, comfortably surpassing the estimate that analysts had of 7.52 billion. By the way, that's equivalent to 8.5 billion dollars in US dollars. So, the gross margins at 53.7%. That exceeded guidance. The impact from tariffs less severe than previously feared, and gross margin was really good at 53%. Anything above 40% I consider good. Anything above 45% I consider really good. EPS came in at a dollar, I'm sorry, came in at 5.9 euros. So really, this is just a blowout quarter for ASML. Net bookings, 5.5 billion euros. That was higher than the anticipated 4.19 billion. But despite reporting this strong quarter, the stock drops 8%. And here's why. The company warned that they cannot provide guidance for 2026 or even guarantee that there'll be any sales growth for 2026. And they said it's the global outlook, the uncertainty involving global macroeconomic events like tariffs is what they're saying. I think they're being cautious. I think they're being overly conservative. For example, already their shipments for China dropped from 41% to 27% of their shipments. That was already in effect first quarter. Dave, I think you're muted, man. I can't hear anything you're saying.
You are. Yeah, I was muted. It's my bad. So sorry, I mute myself, all the time. Just so I don't say anything off color when you're talking. But so those numbers are already baked in for Q1, the lower imports to China. But I'm reading here because this is part of the reason why we had a little more time pre-show because I was looking up ASML.
Yeah.
They said this is the quote from Christopher Fouquet. Uh, he said that while we still prepare for growth in 2026, we cannot confirm it at this stage. So he's basically saying he can't confirm any growth.
Yeah.
And I,
That's
I
what he
would
said.
see that would it would say 10% drop, which is what happened, a 10% drop and actually over 10% drop overall in the price. That's well worth it. If you're saying that, hey, we may not have growth, yeah, I believe over 10% drop is well qualified. But I believe you're going to get in and show through the numbers here that they are going to have growth and that this is overblown.
I agree.
Okay.
By the way, they're keeping their guidance of having revenue of 44 billion euros. Um, Actually, they're saying revenue between 44 billion and 60 billion, which is quite the range, by 2030. They're sticking to that. So they're sticking to their 2030 guidance. Um, to be clear, full year 2024 revenue was about 28.26 billion euros. So even at the low end of that, $44 billion by or 44 billion euros by 2030, that's still quite the revenue growth
So,
over the
question
course of 5 years.
ASML. That's the name of this company and the ticker
Yes.
symbol, by the way, if you're listening.
Yeah.
What is their main product that they commercialize or sell here?
So they manufacture the equipment that makes the semiconductors. And in particular, they have a very large monopoly or near monopoly on the most advanced equipment that make, in particular, the 7 nanometer equipment, which is very popular with Taiwan Semiconductors. NVIDIA makes the semiconductors or designs the semiconductors that are made on those pieces of equipment. They are essentially the company that makes this stuff.
Gotcha.
And they service it too. So a lot of that gross margin, that 53%, is driven by the services portion of it.
Gotcha. And with a lot of plants being built in the United States due to deals being made with these companies, and NVIDIA still has to ramp up more chips. They can't make them up fast enough. I'm sure they have plenty of business already
Right.
secured.
Yeah, they do. And, I think management is right to be cautious about the tariff situation because, a large amount of their business is done here in the United States, but this company is held in the Netherlands. So, the countries that are actually being hurt by the Trump tariffs, they have to factor that in. Especially if Trump goes after the Netherlands with more tariffs and things like that. All that stuff has to be factored in.
Well, that's all
So,
part of the EU, and yeah, I'm going to get into their tariff situation here later on in the show.
right. So yeah, they hold that near monopoly on extreme ultraviolet lithography. That's what that's called. It's a technology that's indispensable for manufacturing the most advanced semiconductor chips at leading edge nodes. Um, they're just absolutely dominant on this. I'm not actually adding to my position because I'm just fine with where I'm at right now on it. At my personal portfolio, I'm fine with what I own. But if you don't own it already, I recommend buying it. I think
Now
this is
would
a
be a
good
good time
opportunity.
because
Yeah.
it's taking that dip. Yeah,
Yeah. And even with their narrowed guidance, which they offered for this fiscal year, still 15% growth on revenue. So I'm fine with this valuation for sure.
nice, nice.
Yeah.
Love seeing that.
Yeah, I'd definitely add to ASML. They're an integral part of the semiconductor industry. And they're an integral part of my semiconductor strategy, which is the designer, NVIDIA, the manufacturer, Taiwan Semiconductors, if you want to own it. I don't own it because the geopolitics, but that's a good, you know, addition. The equipment maker, ASML Technologies, and then the end users like Microsoft and Meta and Google.
Yeah, TSMC, I think, is a good one to own. I know you were concerned about the geopolitics. I know Buffett 2 years ago withdrew his position in TSMC as Taiwan Semiconductor, but I don't know. I feel like if because what we're concerned about is China going in, taking over
Yes.
Taiwan.
Yeah.
If China were to go in, one of the main reasons would be to take over the semiconductor industry there in Taiwan, and thus they wouldn't want to hurt it.
They wouldn't want to hurt it, but they might hold it hostage,
Okay.
you know, for negotiations and things. I just,
They pay like,
yeah,
yeah, extort them 20%.
exactly.
Gotcha.
Yeah.
Which I feel like they could pay, but
Yeah, the other big news over the past week was the bank's earnings. And like I said last week, I wasn't really looking for if they beat earnings per share by like a couple pennies or whatever. I was really because I don't invest in the financials. But
you
what
own
I
Berkshire Hathaway.
Well, other than Berkshire, I said that last week too. Other than Berkshire, I don't own the financials, but there's just other places to put my money that I, you know, think will grow faster. But with that being said, I did listen to the earnings call and I did do the research on what they said about the overall macroeconomic picture, and they were almost all on the same page last week.
Yeah, they were, and I called it though.
Yes.
Called it in a text
We did.
message to you.
So what they were saying, honestly, three words on almost all the conference calls came up: resilience, soft landing, and another term, muddle through.
I thought you were gonna say chinchilla picking.
Yeah, Brandon Beaver and Dave Underwood, chinchilla picking. Yeah, that's top analysts in the industry.
Top, yes, top guy
Straight
in the
from Jamie
counterpart guy.
Dimon.
Yes, thank you,
All
thank you,
right, yeah.
Jamie.
Thanks, Jamie. Yeah. Thank you, Jamie. Yeah. All right. Anyways, so for example, JP Morgan, Chase, Bank of America, Citigroup, Wells Fargo, Goldman Sachs, they were all kind of saying the same thing. Look, the tariffs weren't as bad as we thought they were going to be. The consumer's still healthy, and it looks like, hey, God, can we retire this word at the end of this year, man? I'm hoping we stop hearing the term soft landing. I'll be so happy to never hear it again. But common theme. Bank of America, for example, their leading research team under the direction of Candace Browning, they said no recession in 2025.
You know who else said that in January? David Underwood.
Yeah,
We
I
have
know.
it on our
I know. I
podcast.
went the other way. I thought it was going to be a recession, but Citigroup CEO Jane Fraser observed economic environment has proven more resilient than anticipated. She talked about the strength of the U.S. economy. She attributed that to the American entrepreneur and the healthy consumer. She expressed admiration for the adaptability of the private sector. And Wells Fargo CEO Charlie Scharf noticed that despite inherent forward leaning risk, activity levels have remained consistent. That's suggesting a steady state of economic engagement. Morgan Stanley, they publish a monthly magazine, kind of. It's called The Beat. And in that, they anticipated that the economy will muddle through without a recession in the second half of 2025. Um,
Because none of these guys can come out and say that all the consumer sentiment and all the bad news they were spreading in the first quarter was wrong and that it was wrong of them to lie like that on TV and push a bad sentiment when in fact everything turned out correct, which is what I was saying from the beginning. And I'm sorry. This is where I got on my soapbox in the first quarter when we did our podcast about consumer sentiment. I'm about ready to get on my soapbox again because all these guys came out there and were saying, don't do this, don't do this. Phil LeBeau on CNBC was on there saying, if your financial planner, this is a quote from him, if your financial planner is telling you to buy stocks, fire him because it's a waste of money. And this is in April
yeah,
or beginning of May.
yeah.
What a loser because that guy was got it completely wrong. I don't know why he's on
Okay.
CNBC and I'm not because he's completely wrong. You should have been buying stocks at that time because you would have made a ton of money.
Oh, yeah, dude, early April was the time for sure. And even I was backing up the truck. I dumped more money into my stocks than I ever have back in April. And I was negative on the overall economy.
Yes.
Because buy when there's blood in the streets. That's the
Yes.
phrase, and that will get you very good long-term results. Now, as far as the line goes, look, dude, every economist in the world, it seemed like, thought that we were going to go into a recession. So I don't think that they were lying. I just think that they were following the current macroeconomic mindset and what really people thought was going to happen based on qualified macroeconomic theory.
Let me explain why I say what I said, right? Because they and I look at it like this. You saw their earning reports from this past quarter, right? You looked
Mhm.
at the numbers, I looked at the numbers. What I said was going to happen was their trading income was going to be up a lot, and every single bank's trading investment bank had their trading income up a ton,
Schwab
right?
just, yeah, Schwab was huge.
Yeah. So all their trading income's up. So what does that tell you for the last quarter? That means they were buying when they were on TV saying that this is horrible, the bad news for the economy. Why were you buying then? Why are
Oh,
you
gotcha.
doubling and tripling your trading income and buying stocks, but then on TV you're telling your analysts to say it's
So,
a bad time?
so what you're saying, the stocks that they were buying and selling, I thought you were talking about their
No,
clients because
no.
Schwab client base was buying and selling very, very hard, and Schwab got a lot of revenue off of those
No,
trades.
no, I'm saying the banks themselves, their trade in volume, their trade in income revenue, their no income um doubled for some of these banks for Q2.
Gotcha.
So Goldman Sachs, an extra 1.8 billion if I had that number correct
Yeah.
from trading income. At the same time, you're having an analyst go on TV and tell you that, we're kind of wary about the future of the economy. No, you're not. You're buying $1.8 billion worth of stocks. Don't get on TV and tell me one thing and then go buy all the stocks. That's why I say they lied.
Yeah,
That's why I say
earning their nickname Bankster. That is
that.
earning that nickname for sure. Um, Commentary on the consumer and commercial health was overall pretty good. JP Morgan Chase's Jeremy Barnum said that, hey, we're struggling to see signs of weakness right now. Um,
Exactly, man.
and he said, look, this is consumer credit strength goes primarily with the labor markets, and we got 4.1% unemployment.
Which is historically low.
Yes, very
Historically, we should be above around 5 to 6. So
right.
4.1 is low.
Bank of America observed solid consumer spending data. You know what's interesting? These guys are all saying that the consumer's doing great. Look, the data's showing these consumer spending. But then if you turn around and go survey the consumers, all the consumers say, oh, this economy sucks and we don't have any money to spend. Meanwhile,
Not
they're going out
anymore.
and spending it all.
Not anymore because the consumer sentiments the past 3 to 4 weeks of the consumer sentiment surveys, like the Michigan one, have all been positive, all been
Yeah,
upsides to the positive.
really. Well, it just
Yeah.
reminds me of that survey that came out where all the consumers were saying, "Yeah, we're going to rush out and buy our new cars now because there's a
Because the
recession."
tariffs, yeah, I remember that back in April. Yep.
Yeah.
Yes.
So just average loans at Bank of America, and this really caught me off guard. This is one part that I thought, wow, that's interesting because the Federal Reserve, with their high interest rate environment right now, you'd think that the commercial and consumer loans were going down, but average loans increased by 7% year over year to 1.13 trillion. Commercial loans grew by 10%
That's
at Bank of
surprising, the
America.
commercial loans.
Yeah. With interest rates as high as they are, I
So
was
the
surprised by that.
The personal loans, like the to individuals, consumer loans, I'm a little worried about because of things like these pay as you go, like Klarna or Affirm.
Yeah.
There's a new law that's going through Congress that might get passed, or I don't know if it's a new law or a policy or something, where those companies are going to have to report to your credit reports now. And so if you pull out an Affirm on Amazon or something and you get behind on your payments, that's going to be negative on your credit report here soon because they're going to have to start reporting it. Right now, they don't have to report it and it doesn't show on your credit report, but it will here very shortly.
Uh, Interesting. You know what? One other thing that caught me a little off guard here too is that all of these banks seem to be cutting their forecast for rate cuts this year, with Morgan Stanley saying that we may actually not have any Federal Reserve rate cuts at all. And I think if that's the case, then the stock market's going to have another 10% correction at some point in the next couple of months, which again will be another buying opportunity.
Usually it does. Usually it does, Brandon, every what, August, September? I believe
Yeah.
August is the worst month of the year historically for the stock market as a whole. It's consistently down. August is a negative month.
Yeah.
It's either August or September, and off the top of my head, I believe it's August. Negative month. It's just most of the time negative, and it provides some buying opportunities if you're looking for, if you have some cash on hand, just hold off, wait for that correction to happen. That's your time to do your research. That's your time to find the diamond in the rough, if you
Yeah,
will, and look for that opportunity to buy in.
I agree.
So,
I agree.
all right.
Yeah, the Federal Reserve, they're saying, the Federal Reserve might not cut rates because of tariffs. I'm not sure that I like that.
I don't
Because,
like that. I don't like that reasoning
yeah, I
for
don't
it.
either, because the Federal Reserve, I think, should be specifically focused on the value of the dollar in relation to how much money is actually out there right now.
It's to two
Yeah, and
mandates
two,
of the Federal Reserve, the two
really
mandates,
focus.
inflation and the other, what's the other one? I am
Value
drawing
of
a
the
blank.
dollar. It's the value of the
The
dollar.
value of the dollar. Okay.
Yeah, and well, and I think full employment.
Huh?
I think full employment is
Oh,
what
employment. Yes.
it's
Inflation and employment.
inflation and employment.
I
Yeah,
mean, you can make cuts based off of you want to get employment lower, but like there's no reason to if the economy is moving the way it is.
yeah,
As
but
much as I would love to have rate cuts and just super power this economy that we have going on, when you look at it from the Fed side, they have to go off the data they have, view, and then take a guess at how it's going to go forward. And then their two mandates are inflation and employment. That's
yeah,
what they're meant to be looking at, nothing else. Inflation and employment. Is inflation going to go up? Then we have to go ahead and raise the rates. If
yeah, but
inflation,
there's inflation that they can't control. And they've told us 1,000 times over the past years that we cannot control supply chains and inflation based on supply chains. Tariffs are part of that. The federal government can control that, but really the Federal Reserve cannot. I mean, they can backdoor policies, and try to increase or decrease the value of the dollar with, with easing or with tightening policies or with uh, cutting rates or increasing rates or however they want to do it. They can go that way with it. But I just think that's just one more intervention that's not necessary.
well, while we're talking about tariffs and everything, I'm just going to read these real quick. It's going to take 2 seconds, and it will go into this discussion we're having right now. Commerce Secretary Lutnick says he's confident the U.S. is going to secure a deal with the EU by August 1st. August 1st doesn't mean that they stop negotiating. They're going to continue negotiating if they don't have a deal by then. And that's when Donald Trump has said that they're going to impose 30% tariffs on imports from Mexico and the European Union. Some people have brought up the United States, Mexico, Canada agreement. Well, that's still in place. That's still good to go. So those things in that agreement are exempt from any tariffs. And that Lutnick is focused right now on making a deal with the EU first before it moves on to other areas. Bangladesh also signed a deal on Sunday. That's today. This came out this morning, saying that they're willing to import 700,000 tons of wheat annually to the United States over the next 5 years in order to secure a deal with the United States because we buy a lot of clothing and garments from Bangladesh and they want to make sure they have no tariffs on those. So they're trying to say, hey, we'll sell you 700,000 tons of wheat at a nice price for you if you continue to buy our garments at a nice price for us. So deals are being made, more deals are being made, and countries and groups are coming to the table here. I know I saw a headline also about a small headline about Vietnam and China doing some military maneuvers, but they've always over the years have done military maneuvers. This is nothing new, and that's not an escalation of anything there. The deals with those two countries are still being worked on. So those are some of the latest